Hey everyone, Value Add Mike here to discuss capital calls. For those who don't know, my name is Mike Taravella, Value Add Mike, and me and my business partners have managed over $80 million in commercial real estate, specifically in the multifamily sector. And today I wanted to discuss capital calls, what they are, what causes them, and how to handle it. So a capital call is when your general partners are requesting more funds from the limited partnership group because of miscalculation or a rundown on their bank account due to a miscalculation of expenses or more capital required to manage and run the deal. So the first thing I think of as a limited partner is, why did this capital call happen? I know general partners, I know on my deals I get super hands-on if it's a lot more management intensive, but you don't want to hear as a limited partner excuses for operations, because there's asset management fees, there's management in place. So you really have to dive deeper on what happened. I've heard insurance and taxes have skyrocketed. That could be an instance where it may be out of the control. And I know there's a lot of groups, but that's also just gets worrisome when looking at the deal in terms of where else could they have gone wrong. So making sure that you just understand what's happened and making sure that capital call doesn't happen again, because you don't want to keep pouring more money into the deal just to maintain an ownership percentage in a failing deal. So making sure you understand what happened, I think it's very strategic. If you're talking to your general partners and they don't have that open line of communication, that's a very problematic area. You never want to be coerced or forced into an transaction. Not saying I've seen this happen, but I just want to make sure as a limited partner, you're protected, you understand the business plan moving forward, and you understand why it happened and how it'll never happen again. If you don't feel comfortable with the answer, I think it's important to realize the ramifications of what happens. So if you do not respond to the capital call or let them know that you're not continuing to invest, I think every deal is structured differently, but from what I've seen is that your ownership percentage may get diluted down a little bit, depending on the severity of the capital call, depending on the docs. So please reach out to a syndication attorney, and if you need any help legally, I'm not a lawyer, but I know people who can and can help you in your situation. So please consult with a lawyer. Please consult with your operating agreement, because your operating agreement is also a critical doc of what happens with capital calls and what happens to your capital contribution, etc. So please read up on those, and I know you did before you signed them and looked at the deal. I think it's just important when looking at capital calls, knowing what they are, how they are, and what it means. But I think when push comes to shove, it's important that you understand, you still like the deal, you check the underwriting, you check the rental comps, and kind of have a realization of, do I want to continue this deal, or do I need to have a stop loss on that? So if you have any questions for me or want to learn more about our investing opportunities and just updates, please like and comment and subscribe to the channel and our newsletter in the description. And until then, we'll see you next week.